Movement for our markets continues, and so did the struggle with that 25,000 mark. So while on Friday we closed a little bit simmered in trade, that was not quite the case the whole week because we kept flip-flopping, one good day, one bad day, and just very ranged and narrow sessions throughout the trading week. Having said that, the broader markets did a lot better, and finally FII seemed to be making a comeback for our markets.
Aisha, we are clearly in that phase of the market where the upside is very well defined, the downside is very well carved out. As you walk into trade this morning, you would say that, okay, is there enough ammunition in the market for markets to go higher? The answer to that is actually no. Is there enough bad news in the world or concerns which are centered around technicals or global cues which could really pull the markets lower? The answer to that is also no, which means that from the Nifty angle, if you look at the market, I think the downside and the upside in the market clearly is defined. So while it may sound boring, it may sound more of the same, but that's the setup currently we are in right now, that the breakout trade is unlikely and the breakdown trade is also unlikely to happen. Now, let's look at the sequence of events, which is what we can look at, Aisha. How do you measure the market in the short term? You look at triggers, you look at technicals, you look at flows. What are the triggers? You have an FOMC meeting this week, and hopefully some indication which essentially would come in terms of where exactly the tariff negotiations are moving. Those are the two triggers, external triggers. Locally, flows are decent, but supply also seems to be increasing. So net I would say neutral. So what is new this Monday morning? The new thing is high frequency data points, which is GDP, GST and auto numbers, which we'll talk about it. So it's like just one of the phases of the market where you're confident that markets will not fall, but you're not certain markets will go higher. And this is a good hunting ground for individual stock pickers, because when the upside and the downside is protected, you know that you can manage risk. So if you take long bets, you know that the reversal is not going to happen. And you want to take long bets in small and mid-cap stocks because that's where the catch-up trade, I think, is happening.
Yeah, and that was pretty evident at an index level itself that the broader markets last week outperformed. They managed to gain ground. In fact, the small caps did a lot better with a 1.25% gain at just an index level, and I'm not even talking about individual stocks, versus the Nifty downtick of about almost 1% coming in. But yeah, talking about the high frequency indicators, the GDP data, and that really surprised the street. And one was lauding the fact that the economy managed to exceed the expectations with a 7.4% growth that they've clocked in the fourth quarter of the fiscal 24-25. The full year fiscal GDP growth is provisionally estimated now at 6.5%, marking a four-year low, however, compared to the previous years. But yeah, that 7.4 figure, that really stood out.
That stood out. I think if you frankly look at the internals, there's a huge Mahakumbh impact which was there in it, which we are not acknowledging, but look, that factor was at play. GDP in a sense is indicating that things are progressively getting better, and that also is now matching with what the GST data point is. So you can decisively say that the worst is behind in terms of the macro print, and we have a turf in place, or we have a bottom in place. Now 7.4 may not linger along going forward, but if the advanced tax numbers, they continue, GST mop-up continues, it is a clear indication that the ability of the government to generate revenue support, I think, is there. So on the macro front, I think now the story is very, very clear. Inflation is coming down, crude prices are well under control, RBI has given a dividend, high frequency data point is getting better, and the GDP clearly seems to be moving up. Now with this kind of a setup, Aisha, flows are coming and flows will continue to come. The only reason why I'm saying that you would be in a range bound market is why? Because A, you're the peak of good news. B, even if flows are coming, they are now getting absorbed by new supplies, like Indigo block last week. I think ITC was also last week. So because macro is strong, flows are coming, but the flows are not going to have an impact, because normally when you see this kind of a flow of money, which is the brute force of money, is so strong, but unfortunately it is getting absorbed in different pockets. The short sellers have covered their short positions. That is not also a trigger. The long bias continues. So you would say that, okay, with so much of data and so much of flows, why are markets not going higher? Well, the answer to that is supply also has hit the market, and that I think will be the feature, I think, for the month of June. That's what I think.
Oh, yeah, absolutely. In fact, let's take a look at what the global cues as well are looking like, because Japan is definitely taking quite a bit of knock right now. It's down about over 500 points. You've got the Hong Kong index as well, the HSI, that's down also over 500 points. And China is also taking a You've got the US President Donald Trump, and he's revised or made the decision to actually double tariffs on steel and aluminum imports, which is set to impact the global steel and aluminum prices. From the earlier 25%, he's now doubled it all the way to 50%. And that, of course, is going to have a huge bearing and repercussions as well. In fact, here's the opinion coming in on these double steel and aluminum tariffs.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that. So we're bringing it up from 25%. We're doubling it to 50%, and that's a loophole. And
Okay, that's Donald Trump announcing it, the doubling of the steel and aluminum tariffs from 25 to now 50% at a plant in Pennsylvania. That said, the other important trigger for the oil markets is also the OPEC Plus meeting, which was held over the weekend, wherein they've agreed to now add output, increase it to 411,000 BPD. So that's also going to be having a bit of a bearing on where the oil markets head. Crude prices have managed to log the second weekly low since, and they have been on the softening curve. So yeah, two important sectoral implications in that sense.
See, OPEC has played it very smartly, which is that when demand is down, they've increased production to gain market share, and oil prices are low. Normally, when oil prices have neared to $50, sub $60 or closer to if they are headed towards sub $60, normally OPEC has come out and cut production. In this case, OPEC knows, especially in this case, the dominant supplier within OPEC is Saudi Arabia. They know that the Russian oil sooner than later could come in. If Russian oil sooner than later comes in, then they really need to keep their market share uptick. And strange but true, even though OPEC has increased prices, when supply is increasing, crude prices have actually started increasing higher. That's one. Second, I think what's again happening between Russia and Ukraine, unexpected, both in terms of the new ripple which is coming on the geopolitical front. I mean, the drone attack, nobody anticipated that. So that in a sense is something which could be a lingering worry going forward for the crude market. But in general, if one looks at the positioning of the crude market, I think we do have a situation of abundance. America is a net exporter now, which is US. OPEC has increased production, and the Russian oil now could hit the market at a time when demand in general, because of the tariff interplay, is just going to be slightly on the subdued part. But for India, this is great news. I mean, rupee is firm, oil is firm, inflation is coming under control. So the macro long live India trade, I think, because of external factors and internal factors, I think clearly is intact. So let's just.
If you like this video, then like, share and subscribe to ET Now.